So what are you recommending to clients? What is their main concern?
Well, I think the overall, I think people are a little too scared of a recession. I think the economy will move forward. But remember where we start from. We start from relatively high valuations in U.S. equities, relatively high valuations in fixed income. That means that you're not really getting paid for taking risk domestically. I still think that people need to look at increasing their international exposure. I know it's very unpopular, but international stocks are cheaper than U.S. stocks. Eventually, the U.S. will slow down, the U.S. dollar will come down, and I think that will benefit international investments.
When you say international investments, it's very broad, very wide. Are you looking at particular indices, particular countries?
Well, yeah, I think emerging markets in general, they've obviously been beaten up recently, and there are a lot of idiosyncratic issues. But in general, if you get a China trade deal and if the US dollar comes down, I think EM is the one sector in global markets that should do, EM equities should do the best out of that. So that's where I sort of put an extra chip if I had only one extra chip to put on the table right now.
So just the EM index, or?
Well, I think, I mean, if you want to be more specific, I think Asia, EM Asia ex-Japan, it looks better than Latin America. I think in Latin America, you've got a lot of political issues in Argentina, Brazil, Mexico, which still, I think, will tend to hold back that region.
So you're taking out, to a certain extent, Latin America and Japan. So really you're saying China?
Well, China, Taiwan, Korea, the southern region there, and Thailand, Malaysia, that area I think can do better out of a revival out of global manufacturing, a revival in global trade. There's no area of the world that depends more on global trade than East Asia, and I think that's what should benefit here.